Quick check-in. BTC, yep, we didn't like what we were seeing. Series of wedges. That was a rising wedge, which was not sufficiently strong. It beget a sell-off, impulsive sell-off with a weak attempt at a return move and a further spill. So cryptos are not wearing the current fear in the US indices particularly well. It might be other aspects, we don't know, you never know for sure, but there is certainly a concern about the contraction here in the US equities markets. The key point we're always watching for is when we get a real test of confidence and strength in the US indices, note the break, the return move, and the spill, on what a traditional technical analyst may call a form of triangle. We call it the first inverted HVF in a new trend. You'll learn all about that on a program on the 29th of March at 7 o'clock. So watch out for that. 7:30 actually, my apologies, my bad, 19:30 GMT. Anyway, so the point being, BTC is not holding up particularly strongly. If we take a quick flyby past something like Monero, for example, which has a potential fork this coming month of April, and even still, we're not getting support strength here. And again, a little bit of structure and a squeeze, and the move is to the downside. At a key level of significance, previously a target of a inverted HVF that we spotted on both Monero and traded very successfully on Ethereum in the downside. So this crypto structure here, just to the left, was illustrating downside, and then you got a further wind up after the target was made. You got a little push lower. You got a bit of pushback post the target being overperformed to, but then there's no real long-term zip. In other words, when you have downside targets perform to, it is longer run affirming the bearish structure. Yes, you get a bit of a rally post a target being made, and in this case you got, you overperformed quite a bit, so you got a bit of a bump. But once you got back through that target level, it was all a grind. Note the grind line, sell off, weak squeeze, and then you're rolling over again. So it's not an underlyingly bullish market, as we've said before, on the 1 hour type time frames for cryptos. You might get a bit of hammering now. You've just taken out the low. There was an upside funnel here. You've just run that. You might get a bit of a return rally up to some of these points, but then again, I would suggest the likelihood is more overall downside. Why do we say such a thing? Well, you should always keep in mind your super macro time frame. This was the rally you got from your December highs sell-off. Let's remind everybody of that. This is the December high sell-off. Lots of scenario casts here. Ignore these lines for now. They're in the future. I did a number of webinars off of this where I was pointing out what could or might happen in a bull scenario bear. Let's have a look at this. That's your 100%. That is your 0% of a downside throwdown with multiple grinds, inverted setups with targets all being made, including the last one here, which saw us call for the 6073 low and ended up happening. Then the rally, and then down you come. You got a big rejection candle here that looked overtly bullish, but the fizz in the rally just isn't there. Every time we bounce, we are underwhelming in that bounce. Not undermine, underwhelming. So in other words, this bounce just took out the 38.2 from a massive throwdown from 19,000s, upper 19,000s, 800s, 900s odd, all the way down to 6,000. The best we could get up to was 11. So that was 5,000 of a 10,000 throwdown. We couldn't get a 50% retrace. We couldn't get a 61.8% retrace. We got a second attempt high, which was failing and failed to make a new high. Dow theory. Failure to make new highs and then subsequently making new lows is bearish. So you could have got out there and been defensive. That's what many have done. You got a bit of a rejection candle here. You might have tried to ride the rally back up. I put a little bit in and then started taking off again. There's no real zip here. So defense remains the call. This is a weak rally. Continuation to the downside. Yes, what does that mean? Continuation to the downside has to be the default assumption. None of us like the notion. Depending where we end up getting structure from, you could have a move that could take you sub $3,000. Nobody likes the sound of that right now. Nobody will like the sound of that right now, especially in a long-only environment where guys only know how to make money on the long side. There'll be tears in crypto land. There will be tears in crypto land. This could be accompanied at the same time by a highly overperforming extension to the downside on the indices. If that's happening, there's going to be a lot of banker types that are crying and withdrawing their money, and some of them will have crypto and they'll be selling out there. Problem is, when all asset classes are over leveraged, remember there's leverage available in crypto too on your exchanges, and everybody has to panic out and get to cash. Fiat suddenly becomes the order of the day. As much as it is contaminated, you might get a bit of precious metals, but sometimes metals also go down on a contraction because those that are holding have to sell because they've got other bad investments that are all unwinding. So in the great unwind, cash is king, funny enough. Cash is king, and as yet, we're not seeing the signs that Bitcoin is being showing that as replacement cash. It's more of a speculative asset category right now. Unless you're in Zimbabwe. At the global level, when it's the inverted commas first world nations, their fiats still are holding over the likes of crypto. What's happening to the crypto market cap while all of this is going on? Note how we look at all aspects of market flows. This is a global environment. This market cap is wrong. It's not updating. I don't know why it isn't doing it. It's been 345 for 3 days. It's lying to me. The market has gone down on balance 5%. Note how Bitcoin is generally the lower beta. Ethereum's down more. Ripple is down more. Bitcoin Cash is down more. Litecoin is still a little more. EOS is down more. All of this against the dollar. 8s, 9s. The only first one that is not losing as much as Bitcoin is Stellar at 3. Neo, almost 10%. 6, 6, 6, 5. All of them higher than Bitcoin. That's what I mean by them having, these alts, having a higher beta. Let me put it to Bitcoin, and the only one that's marginally up is Stellar, but it'll still be down against the dollar. Okay, look at those points. That's what it means. And then you've got something at 26 I know very little about. Digex DAO. You'll tell me about it. Personally, I'm not even sure. I have to know. That's where we're at. This market cap number is not adjusting though, and it has been showing the same for a while. Do not trust it. I will try open coin market cap one more time to see if it gives me a fresh number. So it's bearish outlook for all potential asset classes and or cash equivalents at the moment to cash. Cash will be king. Holding fiat might be the thing to do. Yeah, that's not updating. Sorry, guys. This is a website issue with CoinMarketCap, I suspect. But this is accurate. Okay, so that's our take. I'm expecting when the US opens that you probably get further downside and that this low will be run. Often the support and resistance traders will jump in short there. That'll be late, so you'll probably have a small dip lower, and then you could have your first little bit of pushback just to shake these guys out, the weekends, and then we'll spill lower. You know, when you want to build wealth, you need to know when to be defensive. You need to know how not to lose money, and then additionally how you can actually make money in this environment. So we made money mainly off Ethereum on these inverteds. It was my chosen choice for shorting, and we've saved losing money by managing defensively our crypto and being largely now 100% fiat and keeping it very light even during this rally. In other words, our bias was to the macro time frame. We're still in a bear. That said, you know, it's not, it doesn't mean it's an absolute throw it down in one moment. We're waiting for some structure. You've just run that low. You'll probably get a little rally after a big spill like this, quite possibly back up to these levels and complexity, and you'll get a little bit of a churn. But out of this micro inverted head and shoulders, left shoulder, head, right shoulder with upside HVF, you should have had a target run. Only the HVF made target, then it failed. Look how the HVF gave you that target, and then that was it. It was done. Falling wedge, break to the upside. Rising wedge, break to the downside. Rising wedge again, break to the downside. Do you know your patterns? Do you know how to draw them? Can you draw them before they happen? If you can't, come and learn how. But that for only serious folk, 29th of March at 19:30 GMT. Go to the marketsniper.com website and hit the button get started. That is it. This is Francis coming at you saying defense, defense, defense is the order of the day. Fear out there, cash unfortunately and sometimes fortunately can be king. which can be cash, notes, and money in the bank, assuming we don't have a full-blown banking failure, for which I would also advise you to take certain strategic requirements to make sure you look after yourself. So there you are, themarketsniper.com. Hit the getting started short questionnaire. It's not for everyone, only for the serious. You will get an offer. You'll get awesome information on the 7 key mistakes. This is going to be one of the last on this free webinar. In other words, I will not be working on this webinar any further. We'll look at new mini items of free content to help aspiring traders to move forward. So grab it if you can. 29th of March, hit the get started button. Talk to you all later. Watch out in crypto land, although you might get a soft rally now. Don't be a buyer of the Kool-Aid. This is unimpressive stuff on that side. Bye for now.